Bitcoin has already passed $120,000. And now people are asking the big question, can Bitcoin actually hit $200,000? In this video, I'll break it down with clear data. By the end, you'll know whether $200,000 is truly in reach or just hype. Right now, Bitcoin is trading around $120,000, marking a new all-time high and grabbing the attention of both institutional investors and everyday holders. But this surge in price didn't just come out of thin air. It's being fueled by a ton of new money coming into Bitcoin, especially through something called spot Bitcoin ETFs. Now, if you're new to crypto or investing, here's what that means. An ETF is short for Exchange Traded Fund. Think of it like a basket you can buy through a regular stock account, like Robinhood or your retirement portfolio. But instead of stocks inside, it holds Bitcoin. So you're not actually buying Bitcoin directly, but the fund does. And that pushes the real demand up. These spot Bitcoin ETFs were just approved in early 2024, and they've completely changed the game. Over the last few months, they've brought in more than $15 billion. That's new capital flowing into Bitcoin. And on some days, more than $1 billion enters the market in just 24 hours. To give you an idea how big this is, BlackRock's Bitcoin ETF alone now holds over $90 billion worth of Bitcoin. And BlackRock is the largest asset manager in the world. This is a level of institutional demand we've never seen before. It's not just everyday investors anymore. We're talking about banks, hedge funds, and even pension funds getting in. And unlike retail traders who buy and sell all the time, these institutions typically buy and hold for the long term. So when people ask why Bitcoin's price is rising, the simplest answer is because massive investors are buying, and they're buying a lot. The question now is, how far can this momentum go before the market needs a break? Let's start with the technicals. Right now, Bitcoin is showing a bull flag breakout, which historically suggests continuation toward the $130,000 to $140,000 range. Another chart pattern, the cup and handle, is playing out on the longer term chart, which analysts say could push Bitcoin to $150,000 or higher by the end of the summer. Now let's look at the MRV ratio. That's a metric comparing Bitcoin's current market value to its historical average. According to that model, Bitcoin has room to grow up to around $131,000 before it enters overheated territory. So far, technical indicators are pointing toward more upside. Now let's look at the macro. There are three major forces helping this rally. First, US policy. In what's being called Crypto Week, lawmakers have introduced bills like the Clarity Act and the anti-CBDC bill, both of which are seen as pro-Bitcoin. Second, political support. The current administration has taken a noticeably pro-crypto stance, which is giving institutions even more confidence to invest. And third, the economic backdrop. With inflation still a concern, the US debt at around record levels, and traditional markets feeling shaky, Bitcoin is increasingly being treated like digital gold. Bitwise analysts say Bitcoin's fair value right now could be as high as $200,000 to $230,000. Others, like Anthony Scaramucci, believe we could see $180,000 to $250,000 before the year ends. Now, let's not get ahead of ourselves. There are risks to this rally. Number one, if political winds shift or crypto bills stall in Congress, that could kill a lot of the optimism we're seeing right now. Number two, some technical indicators like the RSI show Bitcoin is starting to look overbought. That doesn't mean we're crashing, but it could signal a short-term cool down or consolidation. And number three, macro uncertainty. Any surprise moves from the Fed or global events that spook investors could cause a pullback. Most analysts agree that the $130,000 to $150,000 range is where we may see some real resistance. That's the wait and see zone, where either momentum carries us higher or we stall out. So what are the potential scenarios? Well, let's zoom out and talk about what could happen next. There are three big scenarios that most analysts and investors are watching. Scenario one is the bull case. Bitcoin consolidates in the $120,000 to $100,000 range for a bit meaning it trades sideways or pulls back slightly, and then breaks out again in Q4. If ETF inflows keep rising and we get additional tailwinds like more countries adopting Bitcoin-friendly regulation or US policy turning even more pro-crypto, it's absolutely possible for Bitcoin to hit $200,000 or more before the end of the year. That would mean Bitcoin nearly doubles from here, which seems crazy. But in past cycles, we've seen this kind of parabolic final leg. In 2017 and 2021, Bitcoin doubled in the final 90 days of the run. Scenario 2 is the base case. Bitcoin continues upward, but hits strong resistance around $140,000 to $150,000. That's where profit taking kicks in and momentum slows. Bitcoin might trade in that zone for months, maybe even through the end of 2025, before the next halving cycle creates the next big surge in 2026. This base case is supported by technical models and historical patterns. It's kind of the middle of the road path. Not overly optimistic, but still bullish long run. Scenario 3 is the bear case. Maybe ETF inflows dry up. Maybe a major global event spooks the market. Or maybe US crypto policy takes a sudden negative turn. In that case, Bitcoin could slide back to the $100,000 to $110,000 and stay there while investors wait for a new catalyst. It wouldn't be a crash, but it would slow down the bull run and likely delay the $200,000 target. The key takeaway? Bitcoin's path depends not just on price charts, but on momentum, sentiment, and macroeconomic conditions, all moving together. So what does the data say? Let's look at a few of the most respected models and forecasts that analysts use. First up is the logarithmic regression model. This model smooths out Bitcoin's wild volatility by analyzing long-term price growth. According to it, Bitcoin is still in a healthy growth phase, and $200,000 could mark the top of this current cycle. Not an outlier, but a logical endpoint. Then there's the MV/RV ratio, which compares the current market cap to Bitcoin's realized value, or the average price people paid for these coins. When the metric gets too high, it often signals a local top. Right now, it's elevated, but not at extreme levels. That suggests there's still room for growth, even though a cool down wouldn't be surprising. The team at Token Metrics also ran AI-powered forecasts using historical cycle data, ETF inflows, and altcoin activity. Their models suggest that if demand stays steady and Ethereum or Solana pick up steam alongside Bitcoin, the next leg up could very well push us toward the $200,000 price range. And here's something to remember. In both 2017 and 2021, Bitcoin went parabolic in the final stretch of the bull market. We're talking 80% to 100% gains in just a few months. If that pattern repeats, and many believe it will, $200,000 might not just be possible, it could arrive faster than anyone expects. So, is a $200,000 Bitcoin realistic? Yes, if key trends continue, such as institutional demand, bullish chart setups, pro-crypto policies, if they're all lining up. But expect volatility, and remember that most models still expect a major test around $150,000. If this video helped you see the big picture, hit that like button and subscribe for more beginner-friendly crypto videos every week. And let me know in the comments, do you think Bitcoin hits $200,000 this year?